Good afternoon, everyone. Futures Brizio here, 1:10 p.m. on Wednesday, February 18th, 2026. Hope everybody's doing well, having a good week so far. And going to jump in here. If I have time, I'll do a very quick review of where we are in the futures market. But I'm not sure. I don't want to make this video too long. So we'll stick to the main topic. And then if I have time, I'll do a quick review of where we are in some of the futures markets. But we're going to talk a little bit more about Forex today. As I mentioned before on a couple of videos ago, I decided to kind of dive a little bit back into Forex again on a personal account. I have been trading Forex on a funded account now for several months. I only trade off the higher time frames, 12-hour daily chart. That's it. Nothing lower than that. I might look at like a 4-hour time frame to hone in on an entry or an exit, but I'm not going down to lower time frames for analysis, okay? Because I want to spend a lot of my time on futures. However, and I also think that day trading or certainly scalping Forex is suicide. 99% are going to lose. The Forex market is highly manipulated. And with currency pairs and the fact that you have fundamentals on both sides of the pair driving price, there's a lot of noise in there, and you're just better off sticking to higher time frames and just playing out the trends. And when it's not clear, to just leave it alone. There's tons and tons of Forex pairs. You can see on the right here, I got like 22, 23 of them here. And those are just like the majors and some of the minors, right? I don't even have, there's tons of exotic pairs that you can trade. That, I don't bother with any of those. But you can see there's plenty of opportunity. So even if one pair is like stuck in a range and you may not touch it literally for months, that's fine. There's plenty of other ones, okay? As I also mentioned, I do like using Heikin Ashi charts just for kind of that 30,000 foot view of the trend. Now, people kind of bash Heikin Ashi charts, and there's plenty of reason to bash it because they are not the be all end all. I mean, they look great when you just kind of put it on a chart. It's like, oh my God, look how clear it smooths out all these areas. And it does. It does give you a nice high level view of the trend and significant market structure areas. It's not going to identify minor structure areas within a trend unless you go to a shorter time frame. But if you're looking on, say, a daily chart, like this little impulsive wave right here, if I went to regular candlesticks, and I don't want to spend the whole time, that's not the point of this video, but if we go to flip to regular candlesticks, well, there's really not much here. I mean, you had one little bearish candle. Maybe this could be another entry point going up. But so, it's going to miss some of the structure areas within long-term trends. Probably a good one to drive that point home is something like Euro Aussie, because it's been in this big downtrend. So here's Euro Aussie. If we switch over to Heikin Ashi, you can see there's, only a couple of places where this pulls back. Whereas on the regular candlesticks, there are more areas of pullback that you could look to rejoin this trend. So it will, that's one of the drawbacks, that it will miss some of those entry points. But on the plus, and the other reason why is people don't like it is because it's not showing you the true price. It's taking an average. Basically, every candle closes in basically the middle of the previous candle. And so that's, I'm not going to get into how they calculate it. You can look that up. But it's not showing you the true price. So somewhere where you see a little tiny candle like this could actually be a very big candle on the regular candlestick chart, or it could have a big wick that's not showing up on the Heikin Ashi candle. That's fine. I use both. You can see I have regular candlesticks as set as a favorite, okay? So I will take a bird's eye high level view using Heikin Ashi on the high time frames. When I see price maybe coming into an area of interest, structure area of interest, then I will drop to, I'll flip over to my regular candlesticks and, kind of hone in a little bit more to see if that's a true structure area or if it's being covered up, something important is being covered up by the Heikin Ashi candles. And then at that point, I'll decide on an entry if potentially, and I might go to a shorter time frame, maybe as low as a 4 hour, to hone in a little bit even more on that. And even there, I could use either Heikin-Ashi or regular candlesticks. So they're not the be all end all, but they are a way to very quickly scan through a lot of assets, in this case, 20 something Forex pairs, and just very quickly identify where price is at in terms of structure areas and trend. And then at that point, you can become a little bit more attuned to where you want to look for entries, and then you can alternate between regular candles or Heikin-Ashi. But the Heikin-Ashi does smooth out a lot of the noise, and that's nice. The other thing people do with them is once they're in a trade and the market is moving in their direction, goes into profit, you can use Heikin-Ashi candles to give you more confidence to stay in the trade for as long as those Heikin-Ashi candles are giving you that same color in the direction of the trend. And it's only when you get a candle in the opposite color that maybe doesn't mean you want to exit, but you might want to go investigate that a little bit more and see if it's kind of the end of that wave, and manage your trade accordingly. But this whole move up, be very confident just to stick with it, because the Heikin-Ashi candles are clearly giving you very bullish signals. No wicks on the bottom, which is a strong bullish candle when there's no wick on the bottom of these candles here. Okay, again, not the point of this video. I already just spent 6 minutes talking about something that's not the point of this video, but let's move on. So one of the ways that I want, since I don't trade this Forex that often because I'm trading on higher time frames, and because Forex, of course, is traded in pairs, I do like to look at currency strength. Now, there are many different, years ago when I used to trade Forex on shorter time frames, I had currency strength meters and oscillators and things I used to use. Didn't find them to be all that helpful, to be honest with you. But this one I found here, and if you go to indicators and you just start typing in currency, you will find it very quickly. And it's this one right here, Currency Strength Indicator CSA 5-step system by LND Money. You can see next to the classic currency strength chart, it's the most heavily used one on TradingView. And this is what it looks like now. I have it set, first of all, for visibility. It's only showing up on the 12-hour chart and the daily chart. I'm not using it on anything lower than that. And as of right now, I only have the Japanese yen selected, and there's a reason for that. First of all, if I include all these currencies, if you want to, and it doesn't even have the Swiss franc on here, it's got the other 7 majors. You can see the chart is very busy. It's basically an oscillator. I'm going to call it a chart. It's an oscillator because it has a high level and a low level. It's got fixed levels, a high of 68. That's this upper dotted line. Low of 32. That's this lower one. And of course, you can adjust those. I'm leaving them. These are the default settings. I have not changed them. But you can see if you're using all of these selected, it's a mess. You can't really interpret anything. So I suppose if you're looking at a particular pair that you might have interest in, you can just go in here and just select the 2 currencies for that pair and, kind of look for ones that are very divergent. Like if the yen was very high, like up in this over, this high area, it's over 68, and you find another one that's in this very low area below 32, those are 2 divergent currencies. Those are currency pairs you should look at, because the more divergent they are in their strength, the more that currency pair will move. Okay. Currently, that's not how I'm using this. Now I back tested basically all 7 of these currencies on a few years of data. And I found that the Japanese yen was probably the best one in terms of being able to pick turning points. Now, obviously, and as always, you want to try to trade in the direction of the trend. Those are always going to be your best signals, and this is no different. So, but for the sake of this video, I turned off all the other currencies except the yen. We're looking at the daily chart. I may flip between the daily and the 12-hour. And essentially, what you're looking for is price to get into one of these extreme areas, and as it comes out of there, to look for a trade at that point. Now, because this is the yen and all of these pairs, the yen is the second currency listed, That means a weakening yen will mean a strengthening pair, and a strengthening yen would mean a weakening pair. Okay, so it's the opposite. So if you take this signal right here, this is the yen strength coming out of this heavily long area here. So that would mean that the yen is weakening and that the pair should be going up. And sure enough, we rallied up for 3 or 4 days here after that. This one right here, the very next signal coming out of the extreme short area. So that means the yen is strengthening. You would expect the pair to go down. And sure enough, it did. Now, of course, you can see the difference here is on this down move. You can see it was very weak. It was very muted, wasn't very impulsive. You had small candles with wicks. Why? Because the market is in an uptrend. So this is just a pullback here. It doesn't mean you can't trade it, but you can either make the decision that I know the market's in an uptrend, so I'm going to ignore any of these strengthening signals, or you could decide to trade it and just understand you're trading against the trend and just be careful, right? Use a shorter time frame. Don't be greedy on your target areas, but you can certainly trade in the rhythm of the market. Okay, we get another one right here. The yen strengthens. All right, and again, you're going against the trend. It goes down for 1 day and then it pops back up. There's another one here. Okay, and then the trend it strengthens. The pair does sell off for a few days. You can see above there on the candlesticks. Again, same on same. We're kind of just chopping around here. Okay. Now, we're not getting a lot of buy signals here. We're not getting the indicator going up into this this extreme area because we're in an uptrend, right? So where are our signals to go long? We don't have the indicator going up into this area. So if we look at, like, for instance, I got to move my favorites over here and move myself over here. Like, for instance, right here. And then there's another opportunity right here. You can see price goes up, but the indicator never gets up here to give you that signal. So that's where maybe you want to look at a shorter time frame. You can see it will redraw it on the shorter time frame, and it gets us closer to that area. Again, this is where you have to play around with it a little bit. And change these lines. Now, you can't change the calculation of where the line draws. The only thing you can do is change your time frame and change the levels that it considers. But you can't change anything in the calculation of this line, which is fine. You don't really need to anyways. Okay? So that's the thing. So again, with the yen, it's the opposite. So right here, this was just a few weeks back, January 26th. It comes out of the strong area. So that, again, the yen is weakening. This is a great long entry. You can see it gives a nice early signal right here. Comes out of over the strong yen. The price bottoms out. Remember, we're still in an uptrend. You had this flush, right, where the big traders flushed out all the retail traders, basically, kind of, fooled people into breakouts, whatever, and then they rally the price back up again. Okay. Now, as it turns out, in this case, we put in a lower high. So I don't know if this is a change in direction. We'll have to see if this plays out. But you can see right here, then we had the yen strengthening. This was an early signal. You can see the signal came in right here. Price did go up a little bit more. So depending on your stop loss, maybe this was a losing trade. But then we got a signal a couple of days later, and this one was a good signal. Okay, you got the signal right here, and then boom, price goes down, several days of down action. And now currently, we have come out of this strong area again. Price seems to have bottomed out right here, and maybe is trying to go higher. So is this a long signal right here? It looks like right now it's trying to go higher. We've got this current 12-hour candle is pretty bullish. This is where you can switch over to your regular candlesticks, and you can see it's now trying to break past these equal highs. If this ends up closing above here, this candle ends up closing up here about where it is now, or maybe even a little higher, would be nice. To me, that would be a good confirmation that that signal was valid. Okay. Now, like I said, there are all the other currencies on here too. When I back tested them, a lot of them, like I back tested the euro, the dollar, the pound, and the Aussie. I did not bother with the Kiwi because it's pretty much going to be the same as the Aussie, and I didn't back test the CAD yet. But I back tested these other majors, and I didn't find that the signals were all that reliable. But in terms of divergence, the other way I told you could use this is, let's say you wanted to look at the yen against the Australian dollar. Okay, so we can turn on that, and we need to change the color on this AUD because it's too close. So let's change it to maybe to red. Okay. Okay, so now, and we'll get rid of these two lines here. So now if we look at this, okay, where is a good signal? This is where you kind of use opposite. And if you look like maybe right here, you have the yen coming out of this area down here, so strengthening, and you have the Aussie coming out of this extreme area, strong, weakening. So you would expect to see the Aussie yen at this point going down. Now, it does finally go down, but again, we're in a trending market. So it's not a great signal, which is why I don't like using it like this. It may work sometimes, but a lot of times, again, you want to follow the trend. Okay. Here's one on the daily chart. Okay, you have the Aussie weak coming out of this weak area here, and the yen strengthening. Price just basically goes sideways because, again, we're in an uptrending market. So if you're going to use this divergent methodology where you're going to put two currencies on the chart, on the indicator, and you're going to trade divergent signals, I would still highly recommend you do it in the direction of the trend and just ignore the other ones. If it's in the direction of the trend, then certainly that it's a valid use. But I'm not using it like that. I am just strictly using it for the yen. So going forward, whenever I'm looking at my yen pairs, I will take a look at this indicator too. I mean, you could probably make a trading system and only trade yen pairs, right? If you like really believed in this, you can say, I'm only going to trade yen pairs. I'm going to get rid of all these other ones, and I'm just going to wait for the yen, for this oscillator to get into overbought or oversold, whatever you want to call these two areas. And then I'm going to look for trades on the higher time frames. And again, I'm using the daily or the 12-hour chart. Here's the CAD yen, another perfect example. We have the CAD, we have the yen coming out of this extreme strong area here. Okay, so weakening weakening yen, and we can see price bottoms out, and now it looks like we're trying to go higher. And we are still in an uptrend here. We did have this big flush out move right here. This is pretty nasty, but we did hold support right here. And so if where I have this yellow line, so if this ends up going up, then great. That's perfect. And on the weekly chart, if you want to use your weekly chart, the market structure has held, right? To me, this is like the major swing point on the weekly chart is way down here. This is all just like noise in here. So there you go. So there's a current example. And of course, that would be the same across probably all the yen pairs. It's just some are going to look better than others just in terms of market structure, but they all kind of look like that. So let's see how that plays out. But again, I just wanted to point this out. Now, of course, you can back test this using different currencies, different time frames. Again, if you go to like a 4-hour chart or a 1-hour chart, you're going to get a lot more signals, but it doesn't mean they're good signals, right? Here's the hourly chart. I got to change this to hourly so it shows up. So here's the hourly chart, okay? So again, a weakening yen, right? And it does tend to go up, right? Weakening yen, price rallies, but I mean, we're in a downtrend here, right? So yeah, the price rallies on this, but it doesn't go very far. This is only like 2 hours, and then you have this big drop. So again, no matter where you use it, I would suggest using it in the direction of the trend, no matter what time frame you're using it on. If you're using it on a high time frame, like say a daily or 12-hour chart, You can still get a decent counter trend trade if you get a signal against the trend. Certainly you can. You just need to be cautious because, again, you have to realize you're trading against the trend. If you're going to use it on a really short time frame, in this case is an hourly chart, I think it's a lot easier to stick to the larger trend and just ignore anything that's in the opposite direction. But in this case, like here's this hourly chart. The yen comes out of this, comes out of this overbought area, weakens. Okay. And it does rally up for a couple hours, but you can see the market just collapses here, and you don't really get, you don't really get a good signal here. It does turn and come right back up again, but you can see you never got the signal down here. So if you're following the indicator for signals, you never got a signal and you missed this whole downtrend, which again is why I don't like using it on the lower time frames. I think it's much better on the higher time frames. It's a lot more relaxed. You can just look at it a couple of times a day, see where it's at, and then just move on. Okay. And in this case, like I said, if it's only the yen pairs, it's, was it 1, 2, 3, 4, 5, 6, 7 yen pairs here, which are the major 7 pairs. And, that's it. All right. So anyways, I'm just going to leave that there, guys. So that would be for Forex, just as what I feel is a good tool, but does have some limitations. And like I said, for me, right now, the yen is probably the most reliable one to use it on. All right. So we'll just very, very quickly go over to futures, and we'll just hide this because we don't need this in futures. And let's just take a quick look where we're at here. Rice looks like it wants to start turning down again. I've made I've made lots of comments about rice. If we look at our COT index, and you know what, I'm just going to close myself here. You guys don't need to look at me. So you can see rice has been in this really big downtrend, and you can see our weekly candle right now is very bearish. We had this rally up for the last several weeks. We had our commitment of traders, the large speculators, kind of indicate that was coming when it came out of this extreme sold area, and price did rally, but we are technically still in a downtrend here. And so it's going to be interesting to see. Unfortunately, like I said, because the COT index is only updated once a week, it's going to be delayed by default, right? Because if you're looking at a daily time frame, you've got very clearly bearish price action, but on the COT, you're still in this extreme long area. So we're not going to get another update on this until at least the weekend, when this oscillator updates with the latest COT data. And it'll be interesting to see if it falls out. But a lot of times these signals are delayed, sometimes by a couple of weeks, because it takes that long for the oscillator to catch up, because it's only being fed data once per week. And the market could have been moving for days before the oscillator catches up. The other thing is with rice, as I've talked about, let's go to a monthly chart here. And I've made many videos mentioning this. Is that there is a very extreme area here that's been honored numerous times since 2010 at around this between 9.6 and 9.4. Now we've rallied back up. We're at 10.7 right now. So maybe do we make another push down here and actually get down to this 9.4 level? But we did touch it back here. All right, we did touch it back here in December, and we pushed off of it. Now, there are lower prices below that, as I've mentioned, going way, way back in time, but the most prominent area is sitting right here. You can see there's been numerous bounces of some degree off this level. So I am a little hesitant about short positions, but this, from a pure technical standpoint and from a COT standpoint, this is pretty bearish looking. So we'll see what happens with this. If we get a pullback here on the shorter time frame, I probably would consider a short here, but my targets would probably be back down around these lows down here. I wouldn't be too aggressive because, again, the higher time frame is definitely pointing to a major bottom. So, all right, but there's no denying the short term. This is pretty bearish looking. All right, so soybean oil, again, from a standpoint of COT, we started pushing higher out of here about mid-January, and we are still going higher. And so I would still just be continuing to look for long positions here. This is where, again, maybe your Heikin-Ashi candles can help you to identify areas of pullbacks, like right here, right? These are all valid areas since that turn higher, right in here. This is the 12-hour chart. You can see several areas where even with Heikin-Ashi candles, you could have gotten some decent trades. This one right here may have been a loser, right? Because you had a little 1-2 candle pullback, started going higher and then fell. So this one probably would have been a loser, depending where your stop loss was. But the rest of these are pretty good. Soybeans, again, kind of the same situation, a little bit more recent, right? Just this last run, actually about 2 weeks ago, came out of the extreme short position and seemed to be moving higher. And we had previously put in this a higher low right here. Now we are coming up to a resistance area right here, which also was previous support. So I do expect as price gets up here, we'll have a pullback. And so as long as the COT data stays in our favor, though, any pullback in here to me would be a buying opportunity. And especially if we can get through this high right here, that would definitely continue our uptrend. So definitely more bullish on soybean, but just, beware of some nearby resistance that price is likely to react off of. Okay, for the Canadian dollar, you can see I'm in a small position, one contract right now. It's in a little bit of profit. It's not doing a heck of a lot. Now, I don't really have a lot of, I really don't use COT too much for currencies. So this I'm more just, technically bound here. And to me, this arrow just basically represents a potentially lower high and, potentially move lower here. And so we'll see what happens. I think this will break lower. Now, whether this is a reversal to the downside or whether we just come back closer to this low and then turn, we'll have to see. So, but from a pure technical standpoint, this is looking bearish at the moment after this lower high was put in. All right, switching back to the soy complex. Soybean meal is kind of the same thing, right? We've come out of this extreme short area here and going longer. Put in a lower high right here. Excuse me, a higher low. I always get that mixed up. Higher low and moving higher. We do have that kind of same resistance we see on soybeans, but it's quite a bit further away in soybean meal. So any pullbacks here to me are a buying opportunity. I do have an alert set here on this. So as price starts to turn higher again, if it pops through this alert zone here around 311, I probably would be a buyer on this thing again. Corn has been really frustrating, but this one's interesting because when you look at corn, and again, this is where your technicals can sometimes fool you. If you go to the daily chart, 12-hour chart, this looks pretty bearish, right? We were going up here. We had a big downturn. We started going up, and then we put in basically what looks like a lower high right here. We had this big two, bearish days going back to mid-January, and now we've just been kind of trading, basically sideways up, but pretty weak, right? It's not really making any progress here, and it looks pretty bearish. I mean, you can draw a trend line here. You can draw a structure level, which I have drawn out here, right? Trend line, structure level. Like trend line breaks don't really pull anything in. To me, I'm looking at structure level, so I'm looking at the structure being broke below that area. the last time it touched the trend line, which is here. So I would have to see that break below here. But you can see it's holding right now, and I have an alert to the upside. And why? Because on the COT, it looks like we want to go higher right here, right? We're coming out of over extreme short here. I mean, we did have a higher low put in on the weekly chart back in August. But, you know, it's going to be interesting to see how this one plays out. Whether we get a technical break and we keep going down here, or whether this COT turn here turns out to be valid. I mean, we could get the report this coming week and have this thing roll over and be right back underneath into the extreme short area, and then that would invalidate it. But but right now, we have it coming out of here. Both of the COT lines coming out and turning back up again. Okay. And just to remind you, I have the COT index on here twice. The blue one, I just have the setting, the look back setting set to 10. The default one is 26. So the blue one's a little bit more reactive. But I do watch both of them. Sometimes they're really in sync with each other. But the blue one is the one I kind of hone in on. It will give you, it does have potentials for more false signals. But it also, when there is a good signal, it will be more reactive. Okay. So that's corn. Let's see what happens. Do we get this technical break lower, or does the COT really turn it higher? I just started watching wheat. Wheat, it's never really been something I've traded, but just to throw it on my watch list. But you can see wheat has been trading basically slightly down, basically trending down, but not real aggressive. I mean, it's definitely been going down. I mean, essentially we have lower highs and lower lows being put in. But recently we've had a higher low put in right here. And we have the COT data a couple of weeks ago, end of January, come out of the extreme short area. So are we going to start turning higher? Maybe we got some seasonal forces coming in here. So wheat is one to watch to the upside. We do have some resistance on the daily chart. But overall, could potentially be seeing some bullish early pinnings here happening in the wheat market. And then lastly, crude oil, again, not something I trade a lot. But again, we're coming down here. We came out of this extreme short area way back here. And this is one where the blue line gave you, some false entries, or the red line actually was more accurate, coming out of the extreme short and going up. We did put in basically this, triple, quadruple bottom right here. So let's see if there's any follow through, but at least in the short term, the crude oil market looks to be bullish, but you can see it's a very volatile market. I'm not a huge fan of trading it, but again, with the COT data, it can give you some ideas, at least in the medium term, how to trade this. And, if you're following the COT data, then I would say for this, it's more bullish right now than it is bearish. But you have to go week for week when this thing updates, okay, and see where it's at, okay? So that's it on the futures market. Just that one trade in the Canadian dollar right now. I'm not in anything else, but I am watching, like I said, probably soybean meal being the one I'm probably looking for the closest for an entry, and potentially corn if it plays out in the direction of the COT data. That's where I'm at right now. So, all right, so I'm going to leave it there, guys. Make sure you smash that like button, subscribe to the channel. Questions, comments, leave them down below. Have a great rest of the day, and we'll talk soon.